Transport, trust made simple. According to historian Mark Levinson, the widespread use of shipping containers in the 1950s made the world smaller and the world economy bigger, and simply standardizing boxes of goods greatly improved the global supply chain. The cross-border trade supply chain process can be divided into three parts: purchase, transport, and payment. The purchase process defines the commercial contractual relationship between the two parties in the cross-border trade, the flow of funds and the flow of goods, where the international transport is broken down more. Exporters need to submit customs declarations and accompanying documents to the exporting country's customs, cooperate with the customs inspection, inspection testing, verification, inspection quarantine, and other processes, and obtain an export permit. When everything is ready, then prepare to enter the transport process, which requires participation in international insurance, and the import side also needs to check the goods before being released. As a consequence, the complex process of international trade and the long trade cycle have led to delays in payment and delivery between buyers and sellers. The core problem being trust between buyers and sellers. So how do the two companies and different participants in cross-border trade solve the problem of mistrust caused by different market environments and the lack of guarantees for transactions? Traditionally, in cross-border trade, the way of solving such credit problems has tended to be substitute bank credit for commercial credit between buyers and sellers. In other words, companies use the bank credit as an intermediary, as banks are generally the most credit-worthy commercial institutions in countries. The respective interests of both parties to a transaction are safeguarded by the issuance of a conditional guarantee of payment by a bank, which reinforces the commitment of both parties with the credit of the bank and indirectly complex the payment settlement process. This is also known as the bank's trade finance offering, but this traditional mode of international trade finance is not only a complex financing process, but the bank also charges high service fees, and all transaction costs are huge. However, the drawbacks of less of credit are also obvious. Exporters may be subject to rejection of payment by importers due to non-compliance with credit documents and exchange risk due to low bank creditworthiness. Importers may not be able to take delivery of goods on the basis of a pick-up order because the exporter has seriously breached their contractual delivery requirements, or face the risk of not receiving the goods because the courier has resold them en route. And banks will also be exposed to the associated credit risk and operational risk. Traditional international trade networks have a large number of inefficient and costly pinpoints, and SMEs struggle to withstand the uncertain risks involved in complex national trade networks. It is for this reason that cross-border trade participants, including banks, have been seeking a transaction model that goes beyond letters of credit and can accommodate a wider range of entities. Ant Group's new blockchain product is a digital international trade and financial services platform based on Ant-Chain, Ant Group's blockchain solution, Transport, which changes the above-mentioned step QUO which better fits the need to address trust in international trade, establish a more credible and efficient digital national trade network, lowers the risk of financial services for banks and other financial institutions, and revitalizes their ability and operation of SMEs, allowing them to do business with confidence globally. And transport, buyers and sellers are linked to financial and international logistics service providers using blockchain technology, including distributed ledgers, smart contracts, and cryptography to ensure trustworthiness and tamper-proof of transaction date, and subsequently provides automated payment services, which provides a secure, transparent, cost-effective, and efficient solution for related parties. Simply put, Transport establishes smart contracts for each step of a trade transaction and enables blockchain technology in due course. When a buyer and seller agree on the timing of payment and trade terms through Transport, a trade order is created and the corresponding smart contract can be guaranteed. Transport, based on blockchain technology and its partner banks, can achieve intelligent contract fulfillment throughout the cross-border trade chain. The buyer puts the transaction funds into the smart contract and locks it, and the seller sees the funds in the smart contract and can ship it with confidence. After the order has been chained and validation complete, the partner banks will automatically make payments based on the agreed payment terms of the order. Otherwise, the smart contract returns the advance payment to the buyer, which avoids the traditional model where sellers need to ask buyers to go offline to operate the transfer, and also prevent malicious delays in payment. Buyers can also access financial services such as billing based on real orders from on-chain, and track suppliers and goods throughout the supply chain and the fulfillment chain, thereby enhancing the transparency and traceability of all transactions in the entire supply chain, providing more security while reducing the risk of fraud and increasing trust between trade parties. At the same time, for both buyers and sellers, the traceability of each successful transaction will be given blockchain credit. When an enterprise has a financing demand, financial institutions can submit a verification request to Transport to ask the creditworthiness of the enterprise to determine the authenticity of the enterprise's business. This way of credit assessment by forming a customer profile through blockchain credit significantly shortens the bank's risk control review time and the company's capital turnaround time, and brings higher cost efficiency to the company. Transport uses the characteristic of the blockchain itself and the smart contracts based on the platform to solve the dilemma encountered in traditional international trade. Its online automated recording feature reduces the paperwork and administrative process of traditional models and speeds up payment and delivery cycles. Since the birth of banking, the financial services, the essence of trust-based multi-party cooperation has not changed much, so blockchain and financial services are a natural fit and provide a solid foundation for cross-region financial services in the context of globalization.